Has Donald Trump just ignited the biggest crypto boom in history, while Trump's latest executive order might just rewrite the rules of retirement investing and unlock literally trillions to come into crypto. Not only will it open the gates to that $12 trillion market, it will also bring crypto adoption to the next level yet again. And none of this stuff happens overnight. It's going to take, some time for it all to take place. But the direction we're heading in is bonkers crazy zone, man. So hold on tight as we take a closer look at how this retirement plan can literally retire crypto holders like you. Okay, so what's the big order here? The Secretary of Labor is to redefine what counts as a 401k investment, while also directing the SEC to ease access into alternative assets in retirement plans. It's big, okay? To get why this matters, here's the lowdown, the TLDR on 401ks. Before the 1980s, pensions ruled guaranteed paychecks for life. Then in 1978, Congress added Section 401k, letting employees defer taxes on some income. By 1981, regular workers could join in. So instead of pensions, you put part of your paychecks into investments, tax deferred. And you can pick where your money goes. You can choose what to put your money into. Today, $12 trillion sits in these accounts, mostly in stocks, bonds, and mutual funds, because that's all they're allowed to invest in. When it took off, 401ks quietly shifted retirement power from pensions over to Wall Street's machine. Magically, Wall Street benefited. Of course they did. At first, people were skeptical, but now it's the backbone of the U.S. retirement system. Crypto could follow the same path. It will benefit massively. Of course, there's going to be early doubts, but eventually there will be massive dominance of Bitcoin in 401ks. By this time, no single entity will pull the strings. Bitcoin, of course, is decentralized, finite, and immune to backroom deals. It's just a neutral asset. But Lark, Wall Street's evil. And don't we have ETFs and treasury companies anyway? We don't need this bullshit. We're getting this bullshit anyway. Trump's order is to some extent a little bit redundant because you can just buy these products and sure, yeah, okay. Look, ETFs and public companies like Strategy and Metaplanet made it easier for institutions to be able to ape into Bitcoin, and Bitcoin exposure, and retail as well can do that. But there are some nuances we have to consider here. First is the ERISA, E-R-I-S-A, or Employee Retirement Income Security Act. ERISA was passed in 1974 to protect employees. It makes sure that folks managing your retirement cash, the fiduciaries, douche. Anyway, they play nice and they act in your best interest. But here's the twist. Best interest is subjective, and it usually means sticking with the usual boring suspects. Oh, safe, boring stuff, man. I'll go buy some index funds and some bonds, man. Basically, ERISA protects you by protecting Wall Street favorites. They get incentives to give you their books, essentially. So it's supposed to look out for workers. It often keeps shiny new things like crypto locked out because, well, crypto's a wild ride. Too risky, too volatile for all of these old school rules. With a 401k, your employer works with a provider like Fidelity or Vanguard, and then employees get some kind of menu of investment options that they can choose from, provided by those institutions for their retirement funds. Here's the problem. Today, most menus just serve up the classics: stocks, bonds, mutual funds, and maybe some ETFs if you're lucky. Crypto ETFs, they're here and they're popular and they're a nice start, but they only offer indirect exposure to crypto. It's still a piece of paper in the middle. Now, this is still speculative as the details are being ironed out for what exactly these 401ks are going to directly include, but the executive order might just open up the door to the kitchen here for some more exotic dishes like direct exposure to dog coins. I know what you're thinking. I'm put some Dogecoin in my my 401k, man, for my retirement plan. Might not be as crazy to think. And whatever you pick, the best part is your investments grow tax-free or tax-deferred inside the 401k, which when compounded with Bitcoin and crypto's exponential returns over time could, of course, then supercharge your nest egg for a lot of people. Not bad, right? Now, this is, of course, mega bullish for our crypto bags. Boomer's going to come buy your bags, guys. But before we break that down, guys, if you're trading these cryptocurrency markets, Femex just dropped one of the most aggressive, crazy offers out there. And it's a deal made for real traders. Now, here's the deal. You deposit $1,000, you get $200 back. Nice. Deposit $10,000, you're going to get $999 back. You go all in with $15K, that's $1,299 cash back money in your account. That's crazy stuff, man. And here's the kicker. When you use this link right down below me here, you get upgraded to VIP level 2 instantly. It slashes your trading fees for spot by 50% and your futures trading fees by 40%. If you're trading a lot, you know how much that adds up. This is a limited time offer, but it is available to everyone, everywhere. That means you, okay? You might need a VPN in some cases, but it should be available to you, okay? Don't miss out. Click the link, lock in the deal before it's gone. Again, limited time offer, so go check it out. So how big is all this going to get? How crazy will this 401k thing really be? Are you going to get your Ferrari soon? Well, look, don't go out choosing your Ferrari color yet. It's probably going to take a little while for all this to play out. And it is very, very, very bullish, but it's not overnight bullish. One of those things like 6 months, a year from now, 2 years from now, kind of bullish. First, the executive orders just directed government agencies like the Department of Labor and the SEC to study how to include alternative assets as options, which they're going to. The SEC is very bullish on crypto right now. It's going to be fine, but still, it takes a little bit of time. We're looking at, again, months before all this stuff gets done, okay? We will full send at some point. We're looking pretty bullish right now. Everything's coming to place, but all these things are coming to place take time. Second, when the guidelines have been published, it will take time for major retirement plan companies like Fidelity and Vanguard to develop appropriate funds for employers to use. That's the next step, okay? Then, employers will also need time to revise their retirement plan options, so it may take a while before crypto is actually offered in these individual retirement plans. Again, boomers get to buy the top. People with 401ks get to buy the top, okay? Don't let that be you. Now, whether employers and their workers will opt to invest in these asset classes, that's another question. Probably some of them will, to some extent. I hate to rain down the parade, but that's the reality. It's going to take longer than people think, and, it's very bullish. It is. It's very exciting. The level of social proofing and acceptance of crypto into mainstream finance is mind-blowing right now. As they say, though, we tend to overestimate what can be done in the short term, but underestimate what can be achieved in the long term. Because long term, this is indeed mega bullish. This may not 10x crypto's market cap overnight, but if you're playing the long game, probably you too, this is insane, okay? It's going to be bullish for Bitcoin ETFs. It's going to be bullish for all of crypto, really. At first, funds will tiptoe in. Maybe they'll just limit exposure in some of these funds, 2% or something, but maybe that snowballs into 5 or 10% eventually. Even bigger slices. Think of it like the early internet. People were slow to adopt it. People were scared of tech stocks back in the 90s. Now it's people can't get enough of them. Slow adoption at first will then become an unstoppable wave. Even a small 10% allocation of the $12 trillion 401k market means $1.2 trillion flowing into crypto. That alone could push the market cap up by, gargantuan sum. Okay, even a 1% allocation, $120 billion, is big because that amount of money has an outsized impact on these assets, okay? Bitcoin, Ethereum, Solana, they're going to benefit hugely here. And here's the kicker. 401k funds are locked until you hit 59.5 with heavy penalties for early withdrawal. So if crypto, especially finite assets like Bitcoin, become big parts of these plans, a huge chunk could be off the market literally for decades. Think about it. Less circulating supply means more scarcity, which can drive prices higher, and there's more. A CoinGecko report shows Bitcoin outperformed the S&P 500 and gold by over 26,000% from 2014 to 2024. Now, it's a bit unfair because those are the early days of Bitcoin, but even if you look now, Bitcoin's got a compound annual growth rate around 30% plus, and the S&P 500 usually has around a 10% one, so Bitcoin's still the better bet. Sure, Bitcoin's younger, it's more volatile, so it's a different beast compared to mature stock index funds and all that bullshit, but by simple supply and demand logic, Bitcoin's caps supply, unlike companies that give issuing shares, give it an edge. Plus, some Bitcoin are lost forever, meaning the actual amount of available Bitcoin in markets is smaller than people think. It shrinks the available supply even more. And look, this is just the beginning. Over time, more investment funds will come, more retirement funds will join, and eventually crypto is going to be such a part of mainstream finance, you'll forget about these days where crypto was weird shit for nerds on the internet. It will literally be everywhere, and it's already starting to everywhere. And if you see the forest from the trees here, you'll understand that. Once other countries observe that the U.S. retirees are reaping the benefits, they'll likely follow suit. You think Japan and South Korea and everyone else is just going to sit on the sidelines forever? Absolutely no, they're not. As of 2024, global pension assets reached a record of $61.5 trillion. That is an untapped market that's about twice as big as the U.S. GDP. Just imagine what will happen if just 5% of that goes into crypto. It's not even an insane number to think about. That will increase the crypto market cap dramatically, okay? That's $3 trillion of inflows, which has more than $3 trillion of price impact, okay? These pension funds will pay for the retirement of crypto holders. Thank you very much for buying our bags in the future, everybody. So, did Trump change crypto forever? Absolutely. Combine that with rising adoption, regulatory clarity, debanking, rules being officially done away with, and you've got a recipe for an unstoppable crypto train. Just don't expect fireworks overnight. Focus on the long term. This is more like a diesel engine, okay? Got to finesse it a little bit, warm it up a little bit. But once the oil starts flowing, you better strap the F in because the ride will be wild. And the best seats will go to those who get on early. The only real mistake that people are going to make will be being on the sidelines while the train leaves the station. Don't wait until, Vanguard sells you a 401k product with Bitcoin for $1 million per coin. Get in earlier. Thanks for watching.